The price, Ethereum price.
I think the fair value could be 25K.
Ethereum is dead, and it will be overtaken by other blockchains.
You think about blockchains and public blockchains in particular, there really is only Ethereum. Firstly, about the customer, right? The Ethereum crowd is Lamborghinis and porn star martinis and diamond encrusted helmets.
Welcome to HodlFM. I'm Tanya, and this is the podcast where we discuss latest crypto trends and updates. And today, our guest is Jaydeep Korde, the guru of staking, CEO and co-founder at LaunchNodes and Lido Impact Staking. Hello, Jaydeep.
Hi, Tanya. Thanks for having me.
Let's start with your story now. You manage 800 million in ETH, and you run Ethereum staking infrastructure that supports institutions, solo stakers, and now you work with NGOs. How did you get into staking, and why Ethereum?
Why staking? I think I was really interested in the Ethereum white paper, and in London I met some of the original core team who talked about it as a shared database, and that idea really I found compelling. And then the idea that we have a big global single database and we're developing the logic of applications really easy and the data are together. The idea that you would have a economic mechanism that you can essentially plug into as the network grows and the wealth opportunity grows. So for me, Ethereum staking was always very exciting when I first heard about it. Subsequently, when we set up LaunchNodes, the idea that we wanted to be enabling solo staking, which is actually not about individuals running a server under their box. It's about people owning the infrastructure they stake on, was one really important idea in our business founding mission. And then the other was that this Ethereum staking return is like a money pipe, and you can connect it to fund a social impact in a way that is very difficult with traditional charity and giving, because once you give the money, you have to go and get more once it's spent, right? Whereas the idea of spending the staking return creates a whole new model of sustainability and a different kind of giving, because you're not giving away your capital, you're giving the opportunity cost of the staking return.
Nice. And when did you join the industry? When was it when you started getting interested in Ethereum?
I got into Ethereum in 2014, I think 2015, when I was reading about what it was going to be and what it was going to look like. And I was working in building software at scale as a consultant. And so by 2020, I decided to set up LaunchNodes to explore that further.
Cool. And now let's move to the most exciting part for crypto Twitter. The price, Ethereum price, which is dancing around $2,500, $2,600. And what do you think about the price? Is it the most underrated asset right now, or why is it actually happening that the price doesn't go up?
I don't know why it's happening, but yes, it is absolutely one of the most underrated asset classes that there is. And the divergence between the price rise of Bitcoin and price stability and decline of Ethereum doesn't reflect how useful Ethereum is and how it's more likely than not to be a general purpose technology that will change everything. I think that the Ethereum crowd is a little less, Lamborghinis and porn star martinis and diamond encrusted helmets. So I think we don't like talking about price as much as other chains. And also I think that Bitcoin is a fantastically useful product and will also be a general purpose technology. So I don't think it's a case of one or the other. But I think that because it isn't as easy as simply saying digital gold, it creates confusion as to what it is. But in actual fact, when you look at blockchain and you think about blockchains and public blockchains in particular, there really is only Ethereum. It doesn't. The rest is all very early stage, very nascent. And I'm not saying it's not doing. They're not doing interesting things, but the central value and importance of Ethereum is absolutely undeniable in our perspective, and it's why we've focused on it.
I see, but if we're talking about price, what is your take? ETH to 0 or ETH to 10K by the end of the year? What is more likely?
I definitely think it's much more likely to be 10K. I think the fair value could be 25K. The real issue, though, is when, and also to avoid going to 25K tomorrow and then collapsing to, 3K 3 weeks later, right? Because people need to hold the asset class. We want regulation, we want institutional adoption. 25,000 one day and $200 the next day is not an asset class. That feels like gambling.
I see. And some people say right now that Ethereum is dead and it will be overtaken by other blockchains at some point of time, like Sui or Solana. What can you say against it? What is like major cons of these other blockchains, and what is the biggest pro of Ethereum?
Firstly, about the customer, right? When you talk about the chain and staking, there has to be a customer who's getting some usefulness from the blockchain, right? Now, Ethereum has multiple use cases to it, right? Lending and borrowing, non-fungible tokens mean that you can really build on this in a way that you can't in other chains yet. Now, I think that Solana and Sui, they're in a different stage yet, and all you have to do is lots and lots of hard work, which actually means lots and lots of code commits, lots of people, different people doing it, and it not being a centralized single company or an extremely powerful foundation. Like the story of why Ethereum staking is a primitive financial tool in the new Web3 financial economy, I think has many layers to it, but it starts in the software and it has customers. There are lots and lots of things happening on the network. I don't wish to be disparaging to Solana or to Sui or to any other chain that wants to do the work, but be under no illusion, it is about the work. It's not about pumping shit on different social channels to rob retail investors, right? That I don't think is cool, and we're really not for that.
And there's lots of actually updates happening in Ethereum. They always happen, and recently there was another upgrade, the Pectra upgrade. Can you tell us what it is and what changed for staking?
So Pectra core functionality from our perspective, and what I'd focus on most from the staking side, is the effective balance of the validator node changed. And one of the reasons I think it's important that we understand why that change occurred is because Ethereum was so successful. It had so many validators. Like no one has anywhere near the level of number of validators that Ethereum has, and the distribution across the world. So that success meant that actually the network would need upgrade to ensure that you could have more validators on without the network experiencing finalization problems. So Pectra now means that instead of a validator having 32 Ethereum as the maximum balance that it can have, it's 2048. And what this does is it creates a couple of different pressures, reducing the number of validators on the network as they consolidate over a period of time, changes the interest rate. Also, the effective balance now means that a solo staker, and by that it could be a business, an institution, has to run much less infrastructure, but then can hold a much greater pool of assets of Ethereum, essentially. That makes it easier working at scale or as an individual. And one of the things that we're doing is we're making solo staking now post Pectra really easy with a very, very easy UI. So our whole model was we take away the cost of the beacon node, the execution layer node, and you own the infrastructure, not us. So when we're all dead, your staking's still fine because you've chosen your client and you're away. In the model that we're now moving to, that has a very easy user interface that means you don't need to be a developer or comfortable with AWS or GCP, console. It takes 5 to 10 minutes, and you can run one, or hundreds of nodes that way. And the critical nature of owning your own infrastructure is really important, because this isn't a black box of investing. And Pectra, going back to your original question, what is the difference it makes, is it's always worth knowing that with these changes in the network, the earning opportunity changes, the focus on adoption of a new technology, because real customers and real users need to be doing stuff on chain for it to make any sense.
Speak about it shortly. Pectra allows me as a user save some money on infrastructure, not to spend so much on servers and stuff, and also to get bigger rewards, or no, not really.
I don't think bigger rewards are really a guarantee of it, because I think that the persistence of Ethereum means that more validators will come on, and the idea that you can guarantee that the APR is going to increase isn't true. That there is some really important technical stuff around based rollups that is also going to improve the security and operability of Ethereum. I think that the idea that all this fracturing away of value into the layer twos, Pectra gives more functionality to Ethereum as a layer one. That means that people can synchronize faster, more securely, and not have that be fractured into all of the liquidity complexity and technical complexity of the L2s.
Okay, and what about the staking UI that you briefly touched previously, the project you're working on? So basically, can you explain me how it works? So you just press a few buttons, you send your ETH, and you're done? You don't have to do all this complex setups and stuff of servers, or how does it work?
Tanya, it works exactly how you've described it. You go to AWS Marketplace, and you click on Ethereum Validator. The product has like a number of reviews with the 5 stars. You open an AWS account if you don't have one already, but I think a lot of people do. And you then follow some instructions that take you into a user interface that runs on your infrastructure, and securely create keys and deploy the Ethereum Launchpad smart contract, and you're a solo staker. And the cost of this normally sits with a very big box that has to be maintained, both in terms of the execution layer client and the beacon node. What we do is we take that cost away from you if you don't want it. If you're a business and you're doing complex stuff with the data, and you have regulatory requirements that mean you need to own that infrastructure, we sell you those Lego bricks as well. But from a solo staking perspective, if you're just looking to own the validator infrastructure, never share your mnemonics, never share your keys, and know that you have no dependency on a third party to stake. But right now, AWS is easy, relatively cost effective, and to run a node, it costs $280 a year, which includes the LaunchNodes fee and the AWS infrastructure fee. But I think over time, we'll see that move to bare metal and client infrastructure. For those clients who do want to have it on their own data centers in their own bare metal, we can support them doing that.
Cool. So it will be working for such clients like me, for example. So for those who have some Ethereum, are not really into technical side of things, and don't want to give their coins to someone else. So I keep custody, I still can stake, and it's not really costly as far as I understand. It's really cool.
Yes,
I think
exactly.
it's really helpful product for adoption, because when it comes to crypto, it's really difficult to be in crypto when you're not techy. It used to be like this before. Right now, it's becoming more and more user friendly. But before that, crypto used to be really difficult, not just to understand, but to actually use, because you had hardly any tools to use it. And another product you are working on and that you recently launched is Lido Impact Staking. Can you tell us a bit more about how it works?
Yes, it allows you to stake with Lido and take all the benefits of all that. The 50 largest staking companies in the world, DVT as a technology, OBOL, SSV, and solo stakers, communities through this community staking module. So the technical staking is all done by Lido, but the yield can be donated to support charities and social impact. And that can be 1% of your staking yield or 100%, or you choose anywhere in between. And what it does is it goes back to that simple idea that we talked about, is you can support charity now without giving your money away. And we think that's pretty useful. And we're working with UNHCR, UNICEF, Mercy Corps, and Give Directly in programs whereby they have lots of really rich impact data that says, when you give us money, we are doing this with it. This is the evidence, and this is what's happening. And because of that, we think, as that impact data moves on chain, I think it serves our community well, because everyone wants that transparency, and everyone wants new financial models, and the idea of supporting charity without giving money away, we think, is pretty foundational. We've built this with Lido, and now seeing the adoption both of organizations like UNICEF, also organizations like Give Directly and Grassroots Economics, who've got really, really compelling impact data about what their work achieves and how it helps make the world a better place. Also, we're seeing institutional donors bring TVL to this and be like, oh yeah, great. I don't need to write a check now and wave it away. I keep the money and I just donate the staking return. This works. So GSR, who are a crypto market maker, have adopted this pattern, and they're really keen to talk to other institutions that are interested in doing it and saying, look, this is how we did it. If you'd like to join us and use this model, then we can talk to you about the board mandate, how we manage risk and compliance, all these sorts of things to move in this direction.
And what about NGOs? They're really strict when it comes to crypto. They're really strict when it comes to checking funds, where they come from, like the funds which are donated. Was it difficult to persuade them? Because this is a clearly super innovative thing, and for NGOs, like the traditional bureaucratical structures like these, it is very different from what they used to see. Was it difficult to start working with them? Is it difficult to make them actually use the technology?
Yes, is the answer. Yes, it was really difficult. And I think they have been really great, the organizations we've worked with, in that they have their own Web3 teams who understand this, but then educating and supporting the rest of the organization to adopt and accept crypto and realize it's a good thing. There's no reputational brand damage that's possible. We're not doing anything bad, or more than just understanding that from an intent perspective. We then had to go through the compliance process, right, to be checked and work into their real world, old school models of ensuring we're safe and that this mechanism is safe, including not contracts that are smart, but actually old paper contracts to ensure there's a clear legal remit for what we're doing. We hope others will come join and work in the ecosystem to create new use cases.
And right now with the NGOs, we have a new situation, and the USAID pulled back most of its support for NGOs or stopped their activities for some time. How do you think that reflected on NGOs in terms of adopting new solutions like Lido impact staking? And
I think that's exactly our hope, that in the change and cutbacks that have come from USAID, we see a need from organizations to find new mechanisms, and we are really an interesting one that people should look at, primarily because I think, Tanya, the macroeconomic story for all former donor countries has changed. They are struggling to support the quality of life and domestic challenges. And so therefore their ability to donate is not what it was 10, 15 years ago. And that's partly financial reality, but also partly what's politically possible. And I think we're a long way right now away from governments using it to support their international aid budgets, but I think it could be something that happens in the future. We'd certainly like to see it.
Great. Hopefully it will be like this, because the product is really cool, and it has the crypto side, where usually people are coming for quick gains if we're talking about retail, right? And you have the charity where people usually come to give something to make something better. It's a really innovative idea. And for me, for example, as for the user or for some institutions, it's a great plus because they still, as far as I understand, they own their ETH, which they stake, they are not giving it out. They earn something from staking money, and they can share a proportion to, I don't know, build some schools or help children or plant trees or whatsoever. And at the same time, institutions can save taxes on this. I hope the product will be really successful and you will have lots of institutions and NGOs joining to you. And right now, let's have a quick blitz to wrap it up. I will be asking you just a few questions and you will have to answer like one sentence or really, really shortly. Okay, so first one is ETH price by the end of the year.
5K.
Okay. What's the biggest crypto scam you have ever seen?
Celsius.
Why?
The Celsius, the guys who were offering Bitcoin interest rates of like 6% pre-FTX.
Okay. Have you ever experienced any crypto scams yourself?
I have experienced getting burnt in MakerDAO on March, Black Wednesday or Thursday or whatever it was, when there was a bot that basically stole everyone's money from the vault by zero bidding them when the price changed. But no, I haven't. I've been lucky.
That's good. Let's imagine SEC says yes to staking ETFs tomorrow. What will it change?
I think institutional money will come and it will start looking at building the applications that currently are not on chain on Ethereum. And I think ETF inflows for ETH have been big. I think already once staking is enabled and DeFi is then more broadly enabled, I think it will be very, very, very good for Ethereum's price and adoption.
Good. And the last one about staking. Deploying Ethereum nodes on AWS by yourself or using LaunchNodes service. Which one is better and why?
LaunchNodes, we make it cheap and easy.
Good. Thank you. And that was it. Thank you for joining us today. We had Jaydeep Korde, the CEO and co-founder of LaunchNodes and Lido Impact Staking. Don't forget to like this video, share it with your friends, and subscribe to our channel. That was HodlFM. See you soon.
Thanks.